NVIDIA stock is currently trading at $210.62, representing a decline of 1.15% in today's intraday session as of 7:55 a.m. Eastern Time on April 30, 2026. This downward slip comes despite the company hitting a massive $5.2 trillion market cap earlier this week. While most investors are fixated on the slight pullback, the real story isn't the price drop, it is the massive shift in institutional positioning we are seeing behind the scenes. Large-scale funds are currently rotating out of older tech staples and into these specific high-performance silicon layers because they realize that the data center infrastructure build-out is not a temporary spike, but a permanent structural change in global computing. The common belief is that NVIDIA stock is just a play on hardware chips, but the reality is that the company has effectively become the operating system for the next generation of data processing. When you look at the intraday volume, which is already crossing 2 million shares in the early hours, you see a battle between short-term profit-taking and long-term accumulation. The tension in the market right now is palpable. Investors expect that because the stock recently hit an all-time high, a significant crash must be around the corner. However, the reality of the earnings power says otherwise. If you are using investing sites to track these movements, you'll notice that the forward price-to-earnings ratio is actually more attractive now than it was 2 years ago, because the earnings growth is outstripping the price appreciation. This is the paradox of NVIDIA stock. It feels expensive, but when you look at the fiscal 2026 revenue of $215.9 billion, which is up 65% year over year, the valuation starts to make sense. Institutional activity is showing that while retail traders might be nervous about a 1% red day, the big players at Fidelity and Interactive Brokers are looking at the 75% gross margins and seeing a cash flow machine that has no real peer in the current market. Daily swings like the one we are seeing today are often driven by macroeconomic pressures rather than company-specific news. High interest rates or inflation data might dampen the mood for online investing broadly, but NVIDIA stock tends to decouple from the pack because its demand is inelastic. Companies like Amazon, Google, and Microsoft cannot afford to stop buying NVIDIA's Blackwell chips because if they do, they lose the competitive race. This is why when you look at individual brokerage accounts, you see a high concentration of this single ticker. People are treating it as a foundational asset. For those seeking investment help, the focus shouldn't be on whether the stock drops $2 today, but whether the $62.3 billion in quarterly data center revenue can be sustained. The reality is that the data center segment grew 75% compared to last year, proving that the scale of investment from hyperscalers is still accelerating. If you are managing your own funds through Schwab Intelligent Portfolios or a similar intelligent portfolio service, you might notice that tech weightings are being adjusted. Self-investing requires a level of discipline to see through the noise of daily volatility. The current momentum is being fueled by the fact that NVIDIA is not just selling a product, they are selling a bottleneck. You cannot build modern software without their architecture. This has led to a situation where the stock is moving not on traditional retail sentiment, but on the capital expenditure reports of the world's largest corporations. Every time a major cloud provider announces a multi-billion-dollar upgrade, NVIDIA stock gets a tailwind. Comment below how many shares of NVIDIA stock you currently hold and what your price target is for the end of the year. It is always interesting to see the range of expectations within the community, especially when the reality of the financials is so aggressive. Taking a step back to look at what this company actually does provides even more clarity. At its core, the business model has shifted from gaming GPUs to being the backbone of accelerated computing. While gaming revenue was once the primary driver, it now only accounts for a fraction of the total, coming in at $3.7 billion last quarter. The real growth is in the data centers and the networking business, which exceeded $31 billion for the full year. This networking component is something many people overlook. By acquiring Mellanox years ago, they didn't just buy a cable company, they bought the ability to link thousands of chips together into a single massive supercomputer. This is why the SoFi Invest and Robinhood app users are seeing such consistent interest in the stock. It's a diversified play on the entire future of the internet. Recent sector momentum shows that while other semiconductor companies are struggling with cyclical downturns, NVIDIA is creating its own cycle. They are launching the new Rubin architecture by 2026, which is expected to provide another massive leap in performance. This constant cycle of replacement ensures that their customers have to keep spending. When you look at the trading platforms like the Interactive Brokers platform or the Fidelity mobile app, you can see the depth of the order books. There is a massive amount of support at the $200 level, which suggests that any dip is being viewed as a buying opportunity by the pros. The expectation was that demand would level off after the initial surge, but the reality is that we are seeing record quarterly revenue of $68.1 billion, which was a 20% increase just from the previous quarter. As we look toward the future, the catalysts are numerous, but the risks are also real. Political tensions regarding trade restrictions on high-end silicon are a constant shadow over the sector. However, NVIDIA has been incredibly nimble in navigating these hurdles, often releasing modified versions of their hardware to stay compliant while maintaining their market lead. The opportunity in robotics and physical computing is the next major frontier. The automotive segment, though still small at $604 million, grew 39% for the year. This suggests that as self-driving technology matures, NVIDIA stock will have yet another massive pillar to lean on. The tension between the fear of a bubble and the reality of record profits is what creates the volatility we see in today's $210.62 price point. Expectations for the first quarter of fiscal 2027 are already set high, with revenue projected at $78 billion. For the average person using online investing tools, this can feel overwhelming. Whether you are using SoFi stocks, Robinhood investments, or managing a complex portfolio through Fidelity Wealth Management, the key is to understand the delta between what the market thinks will happen and what the balance sheet says is actually happening. The market expects a slowdown. The balance sheet shows a 94% increase in net income. That gap is where the profit is made. As you navigate the various investing sites and look for investment help, remember that the most authoritative data comes from the hardware itself. In closing, the current movement of NVIDIA stock reflects a market that is trying to catch its breath after a historic run. We started the day at $210.62 slightly, but the underlying fundamentals remain some of the strongest in the history of the technology sector. We've seen how expectations of a cooling market have been repeatedly met with the reality of massive revenue beats and expanding margins. Whether you are trading on the Robinhood trading platform, using Interactive Brokers' fees to your advantage, or holding long-term in Fidelity IRAs, the central insight remains the same. The world is being re-indexed on accelerated computing, and there is only one company at the center of that transition. The contrast between the daily noise and the long-term structural shift is where the true value lies for any serious investor. Keep an eye on the institutional flow and the upcoming expenditure reports from the big cloud players, as those will be the true indicators of where the stock goes next. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.